This video is going to be a full breakdown with examples and a free PDF trading plan of the best way to trade the ICT silver bullet strategy, with the highest strike rate utilizing what ICT describes as his favorite entry model.
That right there, folks, is a unicorn. It is such a beautiful, the strongest algorithmic entry patterns you can ever have, especially if you have just taken out sell side liquidity at the opening price. But what if it comes back down here? It's not going to. It's not going to. It's just like a launching pad right here, and then it leaves it.
I believe that this is the simplest, most straightforward entry model to use for the silver bullet strategy, and it can be applied across multiple markets, as I will show you with the trade examples from the past few weeks. Backtest and apply this strategy, and it will literally be the only trading model that you need to pass your funded challenge and receive consistent payouts with only 1 to 2 trading hours per day. And also, if you would like to see a backtesting video of this strategy, then leave a comment below and subscribe to ensure that you don't miss out on that one. So this is the PDF trading plan that you guys can get access to below. So the ICT Silver Bullet 2024, this is what I think is the simplest strategy to use. So let's get started with trading hours. All session timings are obviously in New York time zone, so ensure that your charting software is set correctly. So down here you can see UTC -5. There are 3 silver bullet trading windows. So we've got the London Open from 3 a.m. to 4 a.m. We've got the New York AM session, which I think is the main silver bullet window, straight after the 9:30 New York Open. So that's 10 to 11 a.m. New York time. And then we also have the PM silver bullet, which is 2 till 3 p.m. So in terms of indicators, there's only one that you really need to add to your chart. So go up here, click indicators, and this is the one that I use, sessions on chart by Aurochs AIF. So then just put in your trading windows. Here you can see this is obviously 10 to 11 New York time, so New York AM silver bullet. So because this strategy uses both fair value gaps and breaker blocks, I'll quickly go over both of those now. So the fair value gap is used to detect market inefficiencies or imbalances, and these imbalances essentially arise when the market displaces in one direction, leaving behind inefficiencies in the market. So the idea behind using fair value gaps is that the market will usually come back to fill these inefficiencies before continuing the impulsive moves, so we can use them as our entry zone. For a fair value gap to develop, there must be a set of 3 candles during a strong buying or selling move in the same direction. So for the bullish fair value gap, the first candle's high will not overlap with the third candle's low, and then that leaves behind this bullish fair value gap. So for the bearish example, the first candle's low will not overlap with the third candle's high, leaving behind the bearish fair value gap. Now onto breaker blocks. A breaker block is a structural pattern, and therefore when we displace through a breaker block, we essentially have a market structure shift. So for a bullish breaker block, the market moves to the downside, so we have a lower high, lower low, lower high, lower low. This low sweeps liquidity underneath this low and displaces through the breaker block. Okay, so that creates a bullish breaker block where we can wait for the market to return to this to then continue higher. The same goes for the bearish breaker block, but the opposite. So the market is moving to the upside, so we get a higher high, higher low, higher high. We then displace through this low, creating a lower low, and then we can expect a lower high at the bearish breaker block. But the real power comes when we combine both of these concepts together. And as ICT says, this is then his favorite entry model called the unicorn entry. Okay, so essentially a bearish breaker is the last down close candle before the liquidity sweep. So here this morning you can see we've got Asia session range is essentially this here. We were consolidating during Asia. We've got buy side liquidity resting above, and we purge that liquidity. Okay, so we sweep liquidity above, and then this is the last down close candle before that liquidity sweep. So here is our breaker block. So we displace through that breaker, leaving behind this fair value gap as well. And then what we'd be looking at doing is entering where both of those overlap. Okay, so to our target, take some off, target the sell side liquidity, which are these lows, of course. Okay, so price was creating a high, higher low, higher high, higher low, swept liquidity, displaced through the last down close candle, so the last bearish candle before the liquidity sweep. That is our breaker block. Combine that with our fair value gap, and we have a really, really strong entry zone there. Essentially, this is our strategy breakdown. We're going to wait for a liquidity sweep of both higher time frame liquidity and lower time frame liquidity. This can be a higher time frame 15-minute hourly high or low, or it can be a fair value gap. So here we've got a high time frame fair value gap. We then want to wait for a lower time frame liquidity to be taken. So this is just a sweep of the most recent sell side liquidity, so the most recent low. And then we want to wait for displacement through the breaker block, which then leaves behind a fair value gap in this displacement leg. And then we want to enter where the fair value gap and breaker block overlap. So let's take a look at how we can apply these concepts and this entry model to the silver bullet trading window. So the first example here is on ES. We're on the 2-minute chart. And as you can see, the market is extremely bullish. Strong displacement to the upside. And what we've done is retrace back into value before our 10 a.m. silver bullet window. Okay, so we've got this 4-hour fair value gap here. There's likely a 1-hour fair value gap in that as well. And what we can see before the start of the hour is we retrace into that, and then we take out sell side liquidity here, this most recent low, and we displace through this breaker block. So this is the highest up close candle before we took out sell side liquidity. So this is what we're waiting for, a displacement through the breaker block, and then a return back to the breaker block for our entry. Of course, in this displacement leg, we want a fair value gap to form. And as you can see here on the 2-minute chart, we have this 2-minute fair value gap here. And when price returns to the point at which both of these overlap, so at this point, it's obviously at the start of the breaker block, we want to set our entry order. The stop loss will be below the first candle of the fair value gap formation or below the breaker block, because obviously it closed below. If we kind of go below both of these, that kind of invalidates the trade. And essentially you just want to target either 1 to 2 risk reward, or you can take some profits off at 2R and then target the obvious buy side liquidity. So obviously in this instance here on the higher time frames, we displaced to the upside. We then retraced back into internal liquidity. And then what can we expect? A return to external range liquidity. Okay. So internal range liquidity here was obviously this 4-hour fair value gap. We then formed this silver bullet entry model here to then continue back to external range liquidity on the higher time frames. So the possibility there to run that for 4R, but I typically like to just target 2R for these entries. I've also just added a one-on-one coaching package for anyone that is looking for coaching calls. Basically, you get access to everything within the lifetime membership, but then also 3 60-minute coaching calls personalized to your requirements. So the next example is on EU during our London Open Silver Bullet. Over here, we've obviously got Asia range highs. So obviously that is our session liquidity. The overall market structure is bearish. So we take out Asia range highs. The market is obviously creating a high, higher low, higher high, higher low, higher high. This is obviously our breaker block here. So when we get 3 candles in a row like this, you can use the formation as your breaker block. And then we displace through this breaker block, leaving behind a fair value gap within this displacement leg. And then obviously the entry would be taken at the start where the fair value gap and breaker block overlap, stops above the first candle of the fair value gap. So we've got 1, 2, 3 candle formation, stops there for a target of 2R. And that obviously lines up with this sell side liquidity. So you wouldn't want to stretch this trade anymore. But as you can see, the power behind these entry models. So here, price just rejects straight off. There's very little drawdown and we displace to the downside. Here, the same, we just tap into this zone and displace to the upside. So as ICT says, this is a very, very powerful entry model. And here we've got another example on NASDAQ. We've done ES, the S&P 500, we've done EU. Now we're going to be looking at NASDAQ. And this was a trade from Friday. So as you can see here, price taps into a 1-hour fair value gap. What do we have resting above that? We have these lows here, acting as obviously sell side liquidity. So we kind of come into this at market open. So 9:30 market opens. We move to the downside, tap into this hourly fair value gap. We then wait for displacement through the breaker block. Okay, so here on the 1-minute chart, we have this formation here, which we can use as our breaker block. We displace through, closing above, and we form this fair value gap here. Entry taken straight away at the start of the breaker block because that's where we overlap with this fair value gap. Stops here can go behind the breaker block. Could also put your stops here, but that's quite tight. So I'd like to just kind of target, put the stops below this low, below the breaker block, and then target this buy side liquidity as our first target for 2R. And then you could also stretch a bit further if you take some off the table at this first liquidity point. So I hope that video was helpful. If you haven't, click the link down below to get access to this PDF trading plan. And basically backtest this, guys. Backtest this model, forward test this model. Let me know how it goes in the comments below. Let me know if you want a backtesting video, and I will bring that to you over the next week or so. But yeah, if you guys want to join the community, here you can see the community results. I've also just added a one-on-one coaching package for anyone that is looking for coaching calls. So both of these are only one-time payments. So here you can see £99 once, £247 once. And the one-on-one coaching, basically you get access to everything within the lifetime membership, but then also 3 60-minute coaching calls personalized to your requirements. We are trading both the silver bullet strategy and also a swing trading strategy as well for anybody that is working full-time and needs a more passive approach to the market. Okay, so trade setups are shared with the Discord, live trading sessions daily. And yeah, if you're interested in the coaching package, click below. There's only 10 coaching packages available until I can open up more time on my calendar for you guys. Like this video, subscribe, and I'll see you guys on the next one.